Good morning, everyone, and thank you very much for joining the morning market review. It's Wednesday and it is the 26th of July. My name is Russell Shaw. I'm a senior market specialist at FXCM, and I'm just going to go ahead and bring up the disclaimers. Mind you, before I do that, I just want to point out my email address, rshaw@fxcm.com. If you would like to correspond, that's the email address to use. All right, let's just go ahead and bring up the disclaimers. We'll start off with a high-risk investment warning. I'll keep this on screen for a few moments. Good morning, Zanetta. Nice to have you on the webinar. Hey, Matais, pleasure to have you on. Kim, thank you very much for joining. And Antonine, thank you very much for signing in as well. It's a pleasure to have you join. Thank you very much. Okay, I'm just going to bring up our market commentaries disclaimer. Thank you very much. And of course, just our references, Market Scope 2.0 and Trading View. I'll just go to Trading View very quickly. I don't think there's much to do on the screen. This is the US 2-year yield. The reason that I bring it up is because we're going to have the FOMC statement and the federal funds rate and the FOMC press conference today. The FOMC statement and the federal funds rate will be released at 8 p.m. ZA, which is 7 p.m. UK, and then the press conference is half hour later. Okay, so if you're at ZA, 8 p.m. If you are in UK, 7 p.m. and all hours on the FOMC statement. And we expect the federal funds rate to be increased by 25 basis points, but we really want to see the tone of the press conference. Is it a dovish or a hawkish tone? Remember that inflation is showing signs of moderation. The dot plots did indicate 2 more rate hikes. That's this one plus one other. Markets seeming to expect only one more, meaning today's. So it's going to be an interesting. It's going to be an interesting meeting indeed. Good morning, Raj. Thank you so much for signing in. All right, let's just carry on from our analysis yesterday when we were looking at reference candles, and specifically, we spent a considerable amount of time looking at the DAX. Now, it's only Wednesday, and it's only the beginning of Wednesday, so we have still 3 days of trade. But just take a look at the candle here. It's actually pushing above the reference candle high. So we've got 2 of 3 conditions, and we want to just keep an eye on that. By the end of the week, we'll know if we get 3 of 3 conditions. You get nothing without the 3rd condition. 2 of 3 conditions sounds okay, but really without that 3rd condition, we don't get anything. We don't get the signal. The signal must have all 3 conditions. And effectively, what are we talking about there? We're talking about DAX attacking overhead resistance and effectively making all-time highs. Okay, this was the resistance that we looked at. So we want to see if DAX has the legs to take out the resistance and then the all-time highs. So we're pretty close. We want to keep an eye on that. We did spend a considerable time on DAX yesterday, so I think we sort of look at other instruments this morning. Again, I think the emphasis must be on the reference candle reversals, and not only on the weekly. Do we have reference candle reversals on the daily? And if we take a look at the DAX on the daily time period, let's just try and see if we can identify those reference candles. Now remember, yesterday we did 2 types. We did the simple type and we did the complex. Here's the complex type. And the reason you know it's a complex type is because the candle to the right is what we call an inside period, an inside day. Okay, so what you do is you just find the high, okay, of the reference candle. And then you can see we've got condition 2 over here, but we'll see if we get condition 3 by the end of today. DAX looking, I think, quite comfortable in zone 1, okay, zone 1 being the bullish area. And if you take a look at the underlying momentum, it is above 50. What about trading it today? Is there some sort of signal that's being generated? Well, let's just take a closer look at that. Let's just get rid of the previous studies. And what we can keep an eye out for is if we get angle and separation on the EMAs. In other words, we want the EMAs to move into that northeasterly direction. And the stochastic is hanging out in the upper quintile. So it's looking pretty good. The one thing that is missing here, really, it's important, is the weekly trend. We don't have the peaks and troughs, but we do have the condition 2, condition 1. We're just waiting for the third condition to come in. So that's looking very interesting as we are moving into trade for the day. All right, let's take a look at the dollar. Let's take a look at the US dollar. Sorry, I think the camera just dropped there. I just want to put it on again. Okay, I'm just bringing up the US dollar. All right. Let's do a top-down analysis here. So what we have is the lower peak followed by the lower trough. We've seen this, and we've seen that the RSI is below 50. We can see that the US dollar is below the 30-week exponential moving average, and that 30-week exponential moving average is pointing down. It's pointing down. Let's go through to the daily chart. Okay, what are we looking for here? Well, let's just draw in 1, 2, 2, 3. Let's put in our labels, and then we're going to just look at this a little closer on Microsoft Paint. So let's just label this. Okay, so putting in a label 1, 2, and then 2, 3. And then let's just explore the labeling over here. I'm just bringing up Microsoft Paint. Okay, 1, 2, 2, 3. Let's put in the labels. Okay, 1, 2, 2, 3. That's what we're looking for here. Okay, is effectively a rally in the downtrend. We know we've got the downtrend. So I want to do this step by step, right? We know we've got this, but the downtrend. How do we know we've got the downtrend? Through to the weekly. We've got the lower peak, lower trough. We've got the RSI below 50. Okay, so we've got the downtrend. Now we know that trends don't move in straight lines. They zig and zag. We've got impulse 1, 2, correction 2, 3. Once the correction 2, 3 completes, it moves back into impulse 1, 2. The impulse typically would be longer and stronger to the downside than the correction to the upside. That's why the price effectively moves down, right? 1, 2, 2, 3. 1, 2, 2, 3. In other words, we're looking for the bounces in the downtrend to effectively try and capture the next impulse. So the question that we ask ourselves here is, are we moving towards an impulse here? So let's just explore the price action. Let's explore the price action and come up with some sort of theory. Now, on the daily chart, yes, we have moved into the neutral, but I'm looking to see if we're going to move from neutral back into zone 3, which is the downtrend. And let's just take a look at yesterday's price action. So do we have some sort of reference? Well, we have to find the highest high in at least 3 candles. The higher is 12,796, and the higher is 12,798. So the actual reference candle is this one. Okay, so if this is the reference candle, then we want to measure the reference candle against the next 2 conditions. The next 2 conditions would be price moving below the reference candle's low and price closing below the reference candle's low. So today becomes an important day, and it just so happens it is the FOMC rates announcement as well. So there is a lot happening with the US dollar, and I think that we're not really going to be able to do an appropriate analysis until after the press conference. So after 8:30 p.m. ZA, after 7:30 p.m. UK, once we get the press conference, if we get price closing below yesterday's low, well, then we potentially have the 2-3 correction. And if we have the 2-3 correction, then the next movement is potentially the 1-2 impulse. Okay, so it does look as if we've got a rally in a downtrend here. It looks as if we've got pretty close to the apex of the rally. We don't know. Okay, this is all very speculative, and it really depends on what happens with the press conference. Yesterday, Kim made the very astute observation: news can wipe out your reference candles extremely quickly. So we're not going to know if we have that reference candle until after the news. If we get it after the news, then we likely have that 1-2 impulse. Well, if we have the 1-2 impulse on the dollar is the first link in a chain, and it ripples through to other links on the chain. Well, the other links would be other major currencies. Let's go through to euro and see what's happening there. Now, euro is also interesting. Why is euro interesting? Because it's going to be affected by the US Federal Open Market Committee statement later today, but ECB is also making its rate announcement tomorrow. So a lot happening with euro. So we go through to euro. We've got the mirror to the dollar. We've got the higher trough, higher peak. We've got the RSI, I beg your pardon. We've got the RSI above 50. And now we go through to the daily. And let's just take a look at this in terms of our labels. 1, 2, 2, 3. Okay, again, we don't have the complete signals here, but let's just put in our labels. 1, 2, 2, 3. Let's go back to Microsoft Paint. What we did previously is we looked at the signals for a downtrend, which was appropriate for US dollar. An uptrend is what we've got to consider for euro US dollar. Okay, so first thing we'll draw in, let's make it black, is the uptrend. Do we have the uptrend? Let's do it step by step again. And well, we do have an uptrend. Higher trough followed by higher peak. Okay, go back to Microsoft Paint. Given that we've got the uptrend, we know price does not move in a straight line. It will zig and zag. Okay, and the zig and zag is effectively the trend unfolding, and then we can label. We've got 1, 2, so that the impulse is now to the upside. The correction is the dip, 2, 3. Okay, once the 2, 3 completes, we go into the next label, 1, 2. Okay, once That impulse completes, we go back into the 2-3 correction. And what we're trying to do here is we're looking for dips in the uptrend to exploit. And if we can find these dips in the uptrend, then we can try and catch the impulses to the upside. Okay, so that's the exercise now for euro. We go down to, and it has dropped from zone 1 into zone 2. Now I'm looking to see if it goes back from zone 2 into zone 1. Well, the first thing that we've got to see is if there's going to be some sort of reference candle reversal. We did the reference candle reversals yesterday on the weekly. What I'm trying to stress now is that the reference candle reversals can be looked at on a daily, and on the daily we're looking at more for timing purposes for the end of the 2-3 corrections. Either the 2-3 corrections are rallies in downtrends or they dips in uptrends, right? So here is the potential pullback in it's the dip in the uptrend, and we want to see, are we going to have another impulse move to the upside? So again, very interesting times. We on the cusp of something that seems to be happening. It's just we're not quite there yet. Another thing just to keep an eye on is, of course, the RSI. RSI pumping above 50. Let's take a look at one more. Let's take a look at pound US dollar. We'll end after pound US dollar because we're going to move on to the crypto minute next. So let's just have a quick look at pound US dollar. Again, think of it in terms of reference candles, top down. All right, this is a very interesting chart. Very interesting chart. Okay, do we have an uptrend on the cable pairing? Well, we've got a series of higher troughs followed by higher peaks. The question is this the next higher trough in the series? Take a look at the RSI. RSI is moving nicely above 50, below 80. Go through to your daily chart now. Okay, let's put in our labels. Let's start these again. All right, where's the 1, 2? 1, 2, 2, 3. Let's put in the 1 over here. Let's put in the 2 over here, right? 1, 2, 2, 3. There's the potential dip in the uptrend. It's moved a little further along than the others. It does look as if we've got the reference candle here. Take a look. Sorry, I just want to get an arrow here. So here is the candle with the lowest low. This is a simple reference candle reversal. Yesterday completed condition 2, 3. What's the RSI doing? RSI is pushing above 50, so it's looking pretty good. I must caution again, be very careful, okay? We have to be very careful to we have to be very careful of the FOMC announcement this afternoon, okay, or this evening. Go through to the hourly chart here, and what we can do is we can look for our timing signals. Angle and separation on the EMA, crossover by the stochastic to the upside, and does the stochastic make its way through to the upper quintile? Okay, so a little bit more work to be done on the hourly, but the daily chart looking a little further along than, say, the euro chart. All right, Mia's just asking if we can do gold, and yeah, let's do it very quickly, and then we'll go across to the next webinar. So just bringing up gold. All right, start over here. I find gold to be a very interesting chart. My interpretation has changed somewhat, that this is a breakout from a pattern. Okay, and the reason that I think that gold is breaking out to the upside is because the dollar is breaking down. Okay, so if the dollar is breaking down, here is the reference candle right there. Okay, and here is the Here is the breakout, and RSI sitting nicely above 50. Okay, so now let's go down to the daily chart there, Mia. And what we can do is I'm going to go like this. So I'm being quite liberal with the impulse move. So I'm including this dip over here in the, and then we'll say this is the pullback. So Mia, where's the reference candle? Start with, where's the reference candle? It looks like it's yesterday's candle. It looks like it's yesterday's candle. And you can see that today, well, we've got condition 2. We'll only know at the end of trade today whether we've got condition 3. But so far, its close is above the high. Again, I want to stress this is going to be very much reliant on the FOMC meeting. All right, guys, let's wrap up there, and let's go ahead to our crypto minute. Thanks very much, guys.